With that, let's actually introduce the first guest on the show. Mitessh Thakkar is with us. We also have, I think, Rajat Bose joining in. So let's talk technicals and levels first. Gentlemen, good afternoon. Thanks for joining in. So let's get your sense on, how to navigate this volatility. We have Rahul Sharma also with us, along with Rajat Bose as well. Welcome to all three of you. Rahul, let me start with you. Levels today, the Nifty came precariously close to 19,000 itself. What is the next zone to track?
Yeah, so, finally we are seeing capitulation on the screen. So this is coming after 4 weeks of sideways range, and once the 19,400 broke in the last two sessions, clearly this is indicating that we are approaching the fag end of this downward corrective move. Now, there are two things to keep an eye on. One is the technical level, and second is the data, which, is indicating a possible bottom. So on the technical levels, 18,900 seems to be, the favorite sort of, psychological Fibonacci level as well as a technical level, because that was the breakout point once we broke out from the multi-month range that we were in. So 18,900 technically. And as far as data is concerned, there are two data points which have turned extremes. One is the Nifty RSI has gone close to 30. Every time this has gone below 30, it has been a good value buy. Secondly, the put-call ratio of Nifty has gone below 0.7. So anywhere between 0.6 to 0.7 is we've seen Nifty forming the bottom and then a recovery happens. We're waiting for one more of this data to happen. May happen tomorrow with the F&O expiry, monthly expiry coming up. If the rollovers are on the lower side, which is lesser than 3-month average, that would indicate that eventually the shorts have got the hard landing that they were looking for, and the retail, which was primarily short, is out of the market. So if the rollovers are on the lower side in tomorrow's expiry, we would very well call for a bottom and expect the Nifty to see a gradual recovery from these levels. So my sense is, it's best to wait out for the 18,900 level or for these data points to turn extreme. Two of them are already at an extreme. If one or two data points like FI long-short ratio or the rollover data that we are closely tracking, if they happen to say so, I think we are very well, looking at capitulation in the market.
Mitessh, same question. Are we staring at a capitulation? We've spoken in the past. We know you've been bearish and cautious in the markets, but that's more of a near-term approach, right? The strategy for the next 1 or 2 days. But if you had to look at this with a longer horizon lens, are we in for a much, much deeper correction, particularly in the broader markets?
Good afternoon. So if I was to look at today's scenario, I think the way my understanding goes is that in the short term, now, and Prashant was also highlighting this based on RSI, I would not give too much of weightage to the RSI, but the put-call ratio, yesterday was around 0.7, and typically you've seen around 0.65 or below that levels, we at least make a temporary bottom in many of the cases compared to an RSI hitting 30. So that is a much stronger indication for me. We are oversold, but the medium-term, long-term structure for me has turned very negative. The indicator setup has turned negative. The Bank Nifty, for example, getting below this lows of 43,400, 43,200 zone, which was a pivot on the weekly chart as well as a 200 moving average area, confirms some kind of a double top on the weekly basis for Bank Nifty and suggests that we are getting into a bearish mode when we see series of higher lows and lower lows and lower highs. So in that sense, I think, while we get a bounce back from these oversold levels one of these days, my belief is that the Bank Nifty is poised towards sub 42,000 levels. And, in the worst case scenario, even 41,500, 41,600 is what I've penciled in. And similarly on the Nifty, closing below 19,200 would be a fresh swing breakdown. And, last time we kind of managed to hold 19,230 and we have filled the gap as well. And then, we'll possibly decline to about 18,700 levels. God forbid something goes further wrong from there and the long-term charts weaken further, then I think I'll look at much lower levels. So I think for me, next 2-3 months will be choppy and downward bias, though in the short term, I would want to see some kind of reversal happening on the hourly to hourly charts before even thinking of covering our short positions, purely because of the fact that the derivatives data indicates we are on the oversold levels. But till I see an action on the price, I'm not in a hurry to cover my short positions.
Okay, so first, Mitessh, 18,700, right? First kind of stop around where you expect the market to get to. Rahul, what was that level for you from here, near term?
8,900. 8,900 on spot.
Okay. And you think it'll be will reverse from there or no?
No. So I think my sense is we should reverse for sure from 18,900 odd. Now, a bounce back could easily mean 400, 500 points on the upside. So, my sense is, we are getting into oversold territory. 8,900 where one should look for initiating long positions.
All right. Rajat is also with us. Rajat, good afternoon. Speaking to you after a while. What are your thoughts?
Yeah, good afternoon, and thank you for having me. I would say that my reading is that, if we were to close below 19,250 this week, then probably we would confirm the double top. 19,991 was on 28th of July and 15th of September, 2222. These are the two intervening tops, and the bottom, the closing price bottom was 19,250, around that level. If that gets taken out, then there is a clear double top formation that is confirmed as per Dow theory. And now that the moving averages are giving bearish crossovers, meaning that shorter term moving averages are piercing longer term moving averages. Precisely, I would like to refer to 9, 20, and 50. They are suggesting that after this week, you are going to get a rally. You're going to get a rally that is you call it a corrective rally. Later on, you call it a suckers rally. Whatever be that, I would suggest people should use that opportunity. That rally might scale up to something like 19,600 kind of levels, and after that, it will fall again and pierce the lows that we make either today or during this week. Actually, we are headed down. And I have studied monthly charts, I've studied weekly charts, and I have seen that most stocks are showing topping out formation. Say, I'll give you a small example. Either you take, say, an SRF, which has shown a huge distribution for a long period of time. That industry, as it is suffering because the input costs are going up and the finished goods prices are going down. So such kind of problems are there. You will take it Linde India, a great company, a great stock so far, but it is showing topping out formations. N number of that kind of things. Only some metal stocks and certain other stocks like, say, some seed stocks like Kaveri Seeds and all, they may bounce back, but more or less, I agree with Mitessh that over the next 3-4 months, we are likely to see some kind of a downward movement. And Prashant, you would recall that 2014, the election rally began in late February. Generally, in election year, before, in the run-up to the election, we see rallies happening. But prior to that, 3-4 months prior to that, we see this kind of corrections happening, not in the same nature. But this time, the problem is that in other phases, say the lemon moment of 2008, when 15th of September to 28th of October, there was a fall at that point in that year. Similar pattern is now showing here, but this time it is at the top and that time it was at the bottom. So after that, there was a sideways movement, and from March 2009, we saw a big rally. So there is a possibility that we are headed down, and I would suggest any rally that you get, exit from those positions that you are not going to hold for long term, and those stocks that are not fundamentally sound.
Got it. Gentlemen, good speaking with all of you, and good to get that perspective. And thank you for joining us. Rajesh and Rahul and Mitessh. Mitessh will, of course, come back to you for some trading ideas as well in a bit from now.